What's the most important resource that you have? If you really thought about this deeply, I think you'd come to the same conclusion that Joey and I did. It's time. In our newest book, What's Without Wall Street, the 3 Steps to Financial Freedom Through Passive Income, we talk about how are we tracking that time? What is the thing that we can do to get more of that time back?
That's right. If you've ever been listening to our podcast and thought, man, it would be amazing if I could take all the things that you guys have learned over the last 10 years and just summarize them, put them in some way to easily digest them and take action, that's what this book is all about. You're not going to want to miss it. Go to wealthwithoutwallstreet.com/new book and get your copy today.
Okay, today's topic, strategic IBC, going from policy to plan. Let's talk about the first step, right? In those first 90 days, someone has set up their infinite banking policy. What are some of those things that they need to be thinking about and knowing to do immediately? Eric, I'll let you go first.
Oh, thanks, Russ. There are things we can do simultaneously. We don't have to take them sort of in series. We can go in parallel and do multiple things at once. One of the things that I think it's important to do is to put yourself in a community. A community is going to help you answer questions that you didn't even know you had questions about. They're going to help you understand how to use the tool in ways that you never even dreamed of. I just started playing pickleball a couple years ago, and imagine this sad analogy. If I go to the pickleball store and buy a paddle and then buy a pickleball, and then you see the one lonely guy that just walks up there to the courts and he's by himself taking that paddle and hitting that pickleball across the net. I'm telling you, he's not getting anywhere fast. He's not learning how to use this tool very effectively and what's even possible with the tool because he's not in a community of people that can show him how to do it, that's been down the road just a little bit further than he is. So I really believe in the power of being better together. You know, the Bible states that as one can put 1,000 to flight, two can put 10,000. So we're just so much stronger when we're working together.
Yeah, I think it is important to have some sort of focus group around the thing that you're doing, right? Like no matter, you've just implemented something. Are you going to take this life insurance policy and make it a part of your lifestyle? And what's the best way to do it is to get yourself into a group. Like if you're going to go into a workout group, you and I are in a workout group together. At least we're in a joint app. We have a joint conversation all the time around working out, and we can encourage each other around that. If one of us have a question about something we're doing, we can talk about it. I think it's important to be within some sort of IBC focus group. So there's a lot of them out there that you can find. Maybe they're on Facebook, maybe they're a friend group. For us, for everybody who sets up infinite banking through us, we put them in what's called the inner circle. And that inner circle is actually listening live right now to this podcast. And they have an opportunity to communicate with each other after and ask questions of our coaches. I think that's super important to be in some sort of focus group. Mark, what about for you? What's one of those things that someone needs to be doing in those first 90 days?
I think one of the great equalizers that happens after someone has set up their policy, if they know what the next step is, if they've already gone through coaching and they know where they're ready to go, that's fantastic. You're lined up and you're ready. But what if you're not? I think one of the cool things is when you set up this system, if you do it in a structured, systematic, methodical blueprint style, this is checking off one of the steps in that phase. And now you've bought yourself the time to what I like to call have reverse FOMO. I had one client who was starting to feel FOMO. She had a certificate of deposit, a CD that was coming due, and she was about to come back into a very sizable 6-figure number that she had placed inside of this. And so when we talked about strategies, opportunities, and so forth, I said, well, if you opt to keep that and it comes back to you, what's that going to feel like? And she immediately said, I'm already trying to figure out what am I going to do with the money? Where am I going to put the money? How am I going to invest the money? I got to do this. I got to do that. I can't just have the money sitting around being lazy. And you could hear all this stress because she was starting to have a fear of what might she be missing out on. And I said, okay, well, let's walk down an alternative path. If we keep going down the IBC road, because she already had a policy from before, we were exploring options of building a second one. I said, if we build that second one, and now that becomes a place for you to store those CD dollars, what does that feel like now? And immediately you could see her shoulders kind of drop down, her face relaxed a bit, and she said, well, now I've got time because I know it's already working in the background. I've already started something, and now I can slow it down and really evaluate and find the best investment for me, the one that is going to get me closer to financial freedom. And so I want to make sure people understand sometimes it's actually a good placeholder too, right? I mean, that's one of the things Nelson talks about. It's a place to store cash. And so I want to bring out that a reverse FOMO can be really awesome because now you've already got something set. You don't have to jump at the first idea that comes your way.
Well, I think it could be self-serving for us to say that, hey, first thing you should do in the first 90 days is start a new insurance policy. But one of the things that we know, right, is that we've all done this because every single one of us have so many insurance policies personally, is that when we're going through that process for the very first time, we don't know what it is. So we're a little bit fearful of what we're going through because we haven't experienced it. Like anything in life, the thing that you're doing for the first time, you have a little fear, trepidation. Now you go through that process and you experience it, and maybe on the first 90 days, maybe it takes longer, but you go, oh, I understand. I made a deposit, I made a premium payment, and it showed up as cash value. You get that first statement, right? Like you get your online access. Is typically what people do. They go ahead and get onboarded. They get online access to the insurance companies. They see their cash value and they go, oh, you mean I can access that amount of money? Oh, so I didn't really contribute $100,000 in there for the year and give up access to $100,000. I got access to, $60,000 or $70,000 or $80,000, whatever their cash value is based upon the certain situation. They're like, oh, okay, well, that wasn't bad. I have all these other things that are either current or coming. I could have done more. And you and I know that what happens with the medical exam, you go through the whole medical exam. Well, it's good for a certain period of time. So some people can take action in those first 90 days after setting it up because they don't even have to go back to the medical exam part. They could probably use some of the same labs and other things to do another one in some certain situations. So I think that's a good point. Joseph, what's something that someone needs to do or consider doing in the first 90 days after setting up the first plan?
Well, I mean, if you think about it, you've gone through some sort of an initial setup to get this policy in place. And I don't know how it is with everybody, but I know whenever you've worked with our partnership with Strategic IBC, you've gone through a cash flow analysis, right? You've already gotten a big picture of where money is flowing in and out of your control. You've identified the biggest things that are keeping your cash flow from coming towards you, right? The big cash flow killers that we've identified. They've shopped your insurance across all the different companies to make sure that it is 100% the best fit for who you are and what you're trying to accomplish. They've used the design optimization tool to make sure it's designed properly. As you mentioned, Russ, there's going to be various different reasons why you design it differently, but it has to do with your goals. And you've actually now got the blueprint of setting up your passive income operating system. All those things are in place. And now I love the things that you guys have already mentioned. Mark's talking about building in time. Now that I've got my money at work, I can spend the time doing a couple things. Like Eric said, being in community with other people. There's no faster way to learn how to use something than to be in a place where people are using it. And then the second thing is get access to the resources that give you case studies, examples to expand your education on the subject. I don't know about you, Russ, but I remember back when you introduced me to this, I did all of the things that you're talking about right now. Number one, I set up the first policy and I did it very scarcely. I couldn't see all of the different applications, so I started one smaller policy. And then within 90 days, what did I do? I came back and set up another policy. I said, oh, this is how it works. I should have set up a bigger policy. So I set up a second one. I did the next thing. I got in community. I started going to events and being in the room with other people that have already set this up. And for many of them were a year, 2, 3 years ahead of me. And then the last thing was I was literally hearing from people who had applied it for giving, for paying their taxes, for making large purchases, for college, like all of the different things that I was going to be facing. And I started to get my brain around this at such high level that I ended up, tripling the amount I was putting into this system within 1 year. I think there's nothing better than to take all of those things in that onboarding phase, that first 90 days, and get really serious about it. Because once those things are in place, now it's part of your lifestyle.
I'm going to give a super simple one. And I think this is one that actually our team who does onboarding for everybody sets up Infinite Banking with us talks about, is that most of the times we hit a need for cash at 100 miles an hour, right? Those times come flying at us. And one of the things that can be the scariest is when we first set up an insurance policy, we've never taken a loan against it. We got to go through and we set up the accounts with the insurance company. We connect our bank accounts and we request that first loan. And, maybe there's some setup that has to happen. Maybe it takes, 5 days, maybe it takes 7 days, right? Like they're going through this initial process that first time. And after that, it gets a lot faster. Well, one of our team members started suggesting that every single time we have somebody that set up their insurance policy, let's just go ahead and have them pre-fill out those forms. Let's go ahead and get their accounts connected with the insurance company in advance for the loan purpose, right? They have typically, if they're not paying annually, they're paying monthly on their premium, they already have that set up. But connecting the loan section so that when they request that first loan, all of that initial stuff has already been done and there's no pressure behind it. So when they need it, they can get it. I think that's a really simple hack that I would encourage most people to do on the front end. I thought that was a good one. Let's talk about the second phase of this. We kind of went through this launching, this onboarding phase. I want to talk about that next time frame. We're going from like 9 months here out, 3, 4, 5 years. Some of those implementation ideas, strategies that people need to be considering and also understanding that they would be doing once they're doing this. Eric, you want to go first?
Yeah, something I'm seeing a lot of clients take advantage of. And Russ, your story resonated with me so strongly about doing my first IBC system. Quite honestly, and I tell a lot of clients, when I did my first one, it was out of pure trust that Russ Morgan told me this was a good thing, because I couldn't completely get my mind around it because it was brand new. I'd never used it, had never experienced it in any other walk of life. And I can't remember if it was 6 to 8 months later is when I ended up doubling mine because my light came on. So there's a couple things you can do. Like you had mentioned earlier, hey, you can expand your system, but I really like when people start to think beyond themselves. And I think that's, we have this maturity in life, Russ, where we spend the first few years of our life only thinking about ourselves. And then as we mature, our purview changes and we have kids, get married, and then we start thinking about others just beyond ourselves. And that also happens in the IBC world, is we take that same care and concern we have for those we love, specifically our kids, and in so many of my clients' cases, is now they've got their situation set up, their IBC system working for them. Now, how can I change my kids' life? How can I do something for them in the very early years of their lives? They're completely unaware that I'm caring for them. They're completely unaware that I'm showing them love in a way that they're not going to get, like Nelson talks about planting a tree, having a long-range view. They're not going to understand what I've done for them maybe 18, 19, 20 years down the road. But when they get to that point, they're going to have something that's going to be life-changing for them. And I'm seeing so many clients take advantage of that opportunity to go ahead and set up an IBC system that changes their kids' life for the future. And it's just an amazing thing to watch.
I think just to add on what you said there, I love that, is I've seen families in that after that 90 days into this first couple of years when they really are implementing this, they set up these family banking meetings where they are talking about, hey, here's what our objectives are, and here's how we're going to be using this system. And for some of them, they built it big enough to where they can incorporate the family into it. Hey, I see that Gen 1, right? The older generation that's telling their grown kids, by the way, when you need to go do an investment, you need to go, if you're going to borrow money from a bank, I want you to come to the family bank first. And the family bank operates this way. We don't give discounts. We charge extra. But here's the thing is that every time you pay interest into the family bank, that money multiplies. And you're going to be a participant in the benefits of that multiplication over time. You can pay a discounted rate at the bank, and they will never give you that one single dollar. And if you ever miss a payment with them, they're going to be really harsh. I love it when families take it to that next level. And sometimes, to your point, in order to really grow it, they start incorporating more people in the family to make sure they can generationalize it down the road. But I think having those family banking meetings in those first couple of years, being able to take their ideas, things that they had on paper, and actually start applying it. My father-in-law, the first deal that he ever did, he actually lent over $700,000 to my wife's dental practice. She had a loan at Bank of America. He took over that loan and had her start redirecting that cash flow to him. That was the infinite banking concept at work. I mean, that was Nelson Nash one-on-one right there, The banks take your capital, they turn around and lend it back to you or somebody and they earn the spread in the middle. Well, he was like, when I shared this with him, he was like, that seems to be the first thing we should do. I go, 100% it should be the first thing we could do. It was the safest investment he could have made, right? 100% backed by the business that was already operating, already successful, had a less than a 1% default rate on it. And he insured the person who was paying him back, my wife. So, I mean, it was a beautiful scenario. We've used that policy and those cash values for so many things along the way. Mark, what about for you? What are some of those things that you see people doing between 90 days to 2 or 3 years out?
Well, I wish I had the same measure of trust in you that Eric had, but being a logical C, even though you married my cousin and I know she's not a fool and she was willing to hitch her wagon to you for the rest of her life. I still had to do my own homework. What I see a lot of people doing is, now that you've gotten through the beginning part, now people start taking stock of, hey, what's actually happening in my world? When a lot of people come to infinite banking, they come with one idea of how the world works and one idea of which part of their financial stream they can, quote, afford or allocate towards this. And as time marches forward, we start asking similar questions over and over again. Is this decision getting me closer or further from financial freedom? Is this getting me closer or further from where I want to be? And then we start looking at, well, is this allocation of my money getting me closer or further from where I want to be? Maybe I'm putting it in certain holding tanks. Maybe I'm segregating my dollars and I'm creating all these dollar silos. So I was talking to one of our clients, a super good friend, and we were having this discussion because we set up policies on her and her husband and her kids. And then now it's been, a year or two, and we were having a chat, catching up on, how's her investments going? How's work going? How's everything else going? And she said, hey, I've got a question. So we pay the kids out of the business, and we normally just take that and just throw it straight into a 529. Now, I'm not a financial professional, so this is in no way, shape, or form tax or legal advice. Please go seek proper tax and legal advice. But she said that, and I said, well, explain to me, what is the thought process there? What is this 529, or what is this 401k that you're thinking of building for the kids? She said, well, we want to hand them all the real estate, but we also want to have something else. And I said, all right, let's do this. You've got 2 kids. Let's give one of them the qualified plan, and let's give one of them an IBC type plan. And now let's fast forward down the road. You guys pass away. You give the kids all the real estate. Something happens to both of them, exact same time. Something happens, and there's no more cash coming in. How are they going to fund their lives? I said, the one who has the quote qualified plan, they may be able to go get other things, but that money has to stay inside of it. It can't put food on the table today. I said, but the other one, if we've got an infinite bank style setup, they can use those cash values. They can take loans for anything they want, and that can put food on the table until systems can return. And so when we started looking at how are you using your dollars, are they achieving the goal that you wanted? The future that she had envisioned for her kids all of a sudden didn't look the same with one choice. It was the freedom and flexibility of the infinite banking that would not only provide for that future that she wanted, but they could start actuating on it today by having access to that cash.
Tribe, listen up. We're entering into the election year. This is the time where people are going to get super fearful. We're going to see businesses start to dry up. We're going to see opportunities, though, pile up for us only if we're prepared.
That's right. You get to choose right now. Will you allow this time frame to negatively affect you in your business and your investments? Or will you be prepared to take advantage of these huge opportunities that come on the backside of this because you're prepared with cash?
Let's get our house in order. If you haven't already maximized the infinite banking concept in your life, here's the chance for you to start learning. Go to wealthwithoutwallstreet.com/IBC. Take our free webinar so that you can start getting equipped with the things that you need to know so that you can take action on this looming event.
By the way, if you haven't started infinite banking in your life and you really want to know more about what we're talking about, go to wealthwithoutwallstreet.com/IBC. And we actually have created a webinar where we detail how this process works. And we actually give you an example of how Joey and I have used it to create almost $30,000 a month in passive income through just one asset. Joseph, what is one thing that you see people doing after the first 90 days to the first 3 years?
I'll tell you, the people that go ahead and make their first investment they're really on track. And that can look very different for different people. Some people have identified early on, they've got that policy in place, and then they say, I really want coaching around passive income. I really want coaching around financial freedom. And they go and work with like Apex in our case. Apex Coaching Group actually walks you through the 5 pillars to getting to financial freedom. They help you get started on understanding your investor DNA. All of these tenets that people have not had education on these things before, they're like, man, I need that. That's an investment. A second investment might be joining a mastermind, right? A group of people that are at a super high level in terms of their own investment acumen, that they can then become the investor that they need to be. And I'm going to go ahead and just tell you, like, recently, I've actually talked with some friends of mine that I've known for years and years. And this kind of just really impacted me. So I want to kind of share it here, if that's okay. I was like shocked at some of the conversation I was having them 5 years ago to today. And recently just had the conversation. I was going over, they were telling me stuff, and I said, why are you thinking so small? Right? The things that they were sharing with me were very basic in terms of the way I was thinking. I was like, why aren't you thinking this big? And I started giving them kind of this vision of what would be possible. And I'm not saying that to say, hey, look at me, I know something that they don't. What happened over the last 5 years? We built a mastermind of people that are way bigger thinkers than you and I, Russ. And it has forced me to think at a much, much higher level. Whereas my friends were not in rooms like that. And so the real question is, are you willing to invest in yourself into a group like that? Because there's a massive difference in what your future will look like if you take that action versus not. And you can think of it as, what would you gain versus what would it cost you? And I can tell you, it's costing my friends a lot by not being in those rooms. So, and then the last thing is, man, I've figured out I want to be all in on land flipping, or I want to be all in on short-term rentals, or whatever the case is. And you make your first investment with that. So making your first investment, I think, is one of the critical things that you should do in this phase that we're talking about.
Yeah, I think the faster you can take action, get the money at work, see what's happening, the better. One of the things that I see is people really start implementing this. They want to make it operational in their lives. They need a system. And that was the reason why you and I wrote the ebook for the passive income operating system. By the way, if you want it, it's a free copy. It's wealthwithoutwallstreet.com/PIOS. And in that, it actually can show you how to incorporate everything you do through this process. And I think early on, you're just trying to get your feet underneath you. You're trying to see how it works. But as we get down into 2 years, 3 years, we start utilizing it. We want to make it systematized. We want to make it efficient and effective. And by utilizing this passive income operating system, now we can utilize it to not only pay taxes, like Joey said, but start buying assets and then getting the cash flow from those assets flowing back through our system, and without them skipping a beat, getting back at work, right? Because every time that money sits idle, we call it lazy cash. That's $1 that's not at work for you. That's like you walking into your business and seeing half of your employees laying on the ground, not doing a thing, right? Like we need our, as Mark calls them, soldiers. We need our soldiers at work. We got to get those dollars at work. So the passive income operating system, when it's operationalized, when it's fully implemented into our family's finances, we get those soldiers constantly at work. And I think that's a really big key in that, from that 90-day mark through the first couple of years, you really can get that going and get that going well. All right. I want to talk about the last phase, which just is the recalibration, right? Someone, when they come through as the very beginning phase, before they set up their insurance policy with you guys, you're helping them through what they're telling you, build a roadmap, right? As far as we can possibly see. But we're setting out on a journey. Joe is going to Europe, right? His wife is planning every step of the trip. And my guess is it's going to go perfectly. If I was going on this trip, I would not even know where I was sleeping the first night. I would not know where we're going to eat the next day. It would definitely change based upon the experience we had from one day to the next. And for a lot of people, we have to constantly be recalibrating, right? Maybe the plan that we set or didn't set in my case needs to be adjusted to account for different things. And the same thing would be for you guys, right? Like if you're heading someplace and they were to have a big fire, they were to have an event that you guys didn't know about, that would maybe prevent you from going to see some of the things that you thought you were going to see. You're going to have to recalibrate. You have to do something else. Eric, talk a little bit about maybe some of the recalibrations that happen for people.
Yeah, Russ, over and over when we have our initial meetings with clients and we ask them, there's probably better ways to ask this question. What is the big why initially? Most of the time, freedom, that comes up a lot. Time freedom. I want to get my time freedom back. I was on a call with a guy today. He said, I've got kids that are 7 and 11 and 14, and the time is ticking. And so they initially think about time freedom and this, even the IBC infinite banking concept. The time freedom's a concept, but so is infinite banking. It's just a concept in their mind, and maybe even a dream. You might say, can I actually achieve this reality? And Russ, once they've been in the community with others doing this, implementing their plan for a number of years, they begin to see, well, there's actually more possible than what I initially had. So maybe it's not just freedom for myself, but generational time freedom. What is my legacy going to look like? And how does this impact my legacy? And I think when the client gets to that point and starts seeing what's possible, like Joey said, they realize they've maybe thought too small in the beginning about just personal time freedom, but now they can really begin to think about generational time freedom and truly impacting their family tree and generations on down the line. And it's so amazing. I think about my parents. Unfortunately, I didn't know anything about IBC until much later in life. And so my parents and my wife's parents are constantly saying, Russ, or we're saying to them, please spend your money. They bought into the save up the big pile of money plan, right? Please spend your money. Please spend your money. Try to hand us your last nickel as you pass by on the way to the funeral. But here's what they say inevitably, Russ, both sets of parents. No, we want to make sure we leave all you kids something. So now they're bound up by what they want to do. That's a good thing, right? It's a good thing to think about, but they don't feel the freedom to use what they've worked so hard for. The instant legacy that's created with an IBC system means that whether it's passive income or maybe you've done the, save a wad of cash, you can take freedom with that asset, because once you graduate from this life, you've got instant legacy. And I'm telling you, I love the freedom of that. And I love thinking about that for my own life and my own kids.
So good. Mark, how about for you? What's some of those recalibrations that you see taking place?
One of the ones that I see is there's so many shiny pennies. The more you step into this infinite banking realm, into this passive income realm, you start getting more and more exposed, right? If you're exposing yourself to other people, you're getting other ideas, you're seeing all these new things to invest in. And unfortunately, sometimes what can happen is we become a jack of all trades, master of none. So for some people, this is a great opportunity to actually kind of slow down a minute and actually recalibrate and double down on the strategies that are working. You do have to do some field experimenting. You do have to try some things out in order to find out what you do and you don't like. But when you find those things that you do like and they fit and they work and they move you closer to that end game that you want, those are the strategies that it's time to start saying, we need to double down here. This has worked. This fits. This gets us where we want to go. Let's put a little more effort into that one, as opposed to going after the new shiny penny, which you're not exactly sure if it's going to be a fit or not. I think that's also where the investor DNA comes in, right? I started this journey without knowing what my investor type was. I did know, but I didn't. And it took going through, it took you guys figuring out that you could actually share that and hone that, because I went in on an investment, paid about $8 or $9 grand for coaching on it, was going through the whole process. And then at the very end, before pulling the trigger and actually doing it, realized, this just doesn't feel like it's for me. It looks great on paper. As a logical C, I can see that part of it. But as a logical C, I can see this other part that is just not a fit. And so that was me taking that moment to pull back and say, even though this does look like it's a good strategy, it's not a good strategy for me. I need to go back to the things that actually fit for me. And then now, in retrospect, now that we do have the investor DNA, when I look at myself as compared to that specific investment, oh man, you guys could have saved me like $8 or $9 grand and about like 2 or 3 months of going through it. But I'm glad I did, because I got a tremendous amount of education out of that. It was just, could have been a little bit cheaper. Could have gotten a discount on that, which would have been great.
Yeah. Like you bought that course at a discount from what Joey and I paid for it. I know that. Our price point was a little higher than 8 or 9, but it ended up working out for us. So we made it back. Stallion, how about for you, man? What's one of those things that people end up tweaking? I know you tweaked a bunch of things personally, but what are other things?
Well, I'm going to keep on this track of just thinking bigger. And for me, and for many people that have worked with us in the past, you start to think about, hey, I'm building assets now. Before, and I'll just tell you, before going down this path, you weren't thinking in terms of assets, maybe. You were thinking in terms of just putting money away and hoping that it grows down the road, accumulation, but not actually having anything behind it. Now that you actually have physical assets, maybe it's real estate, maybe it's a business that you've built, maybe it's, something else, I don't know. But you start to have assets and you start thinking, wait a minute, if I were to sell this, where would the money go? And you think, I got to have a place for this. And you look at your policy system. By this point, you may have 4, 5, 6 different policies. And you look at the loan balance and maybe it's 100,000 and you've got $1 million asset. You're like, wait a minute, I got a problem. I got to have a place for that extra $900,000. Where's it going to go? And what that does is, it expands your mind to think, I need a bigger system to hold bigger opportunities. And so, for me, it's been starting new policies to borrow almost immediately for the next opportunity, and knowing that I'm leaving out some loan balance that I could repay once the flood of those assets come in. And I just think, again, this is on your journey. I'm not expecting you to do that right out of the gate, but man, 2, 3, 5 years in, you will naturally, if you stay on this path that we've been talking about today, you will naturally start to think about that, and you'll have that problem to solve by expanding your system.
Yeah, you start thinking about assets, not accounts. And right, as those assets start to multiply and compound, right, we start to see these assets growing, and that's what's happening. And that's what one of the recalibrations I see happening after the fact is that you really, when you first start out of this process, most people don't really have an estate to plan, right? Like, it's like, I don't have $11 million or whatever the the current, estate tax threshold is. Anything over that, I think that's what the math is. And I don't have to worry about any of that. But what I see is as people start going through this process, they start acquiring assets. Not only does the death benefit become an asset to them, but the things they're using the cash values to buy become assets. And they start thinking, oh, okay, well, now I'm investing in my business. Now my business is growing. I'm investing in myself and investing in masterminds. And now I got more businesses. These assets are starting to multiply. And now I start to really understand how people create wealth that is ultimately a taxable estate. Is because they're around people that think this way and do this way. And I mean, there are problems. You're going to have to pay estate tax potentially if you hang around groups like this. That means you're going to have a decent amount of wealth. That means you're going to have problems of figuring out how to disperse it to all those kids and grandkids and so forth. But also you just have to start thinking about, how do I prepare? Who are those people that I need to have in my resource list? I got to maybe reorganize the ownership or the beneficiaries of these insurance contracts, because now I don't want them in my name potentially, right? All of these things would be stuff that you would work with your counsel on. But that's what I see people recalibrating. The people who are really engaging in this, the people at our highest levels, these are the problems that they have, right? Everybody has problems. It's just at different levels. And these are good problems. I think much better problems than when we had before we started the system, because I would have never thought that way. Because I wouldn't have had those things. I would just had accounts. I wouldn't have had assets. Well, I hope that this podcast was helpful to you. Help cast vision to things that maybe you haven't experienced yet. Whether you have even started IBC. Remember, if you want more details, go to what'swallstreet.com/IBC. And you can get access to a webinar, or you can schedule a call with one of these coaches and they can talk through the different things that are going on with that. But I think this is a process we want to keep giving you vision to, because this is just one of the tools that you put in your tool belt on your way to building passive income that'll exceed your monthly expenses, so you truly can become financially free and start living the life that you want. Have an amazing day.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand, so that your wealth will never run dry. See you next episode.